The conventional dairy market has been pressured by a long list of related factors, including changes in industry offerings, struggling farmers, and unsustainable costs. These challenges have led domestic dairy icons Borden and Dean Foods both to file for bankruptcy recently, as consumers' dietary habits have been generally shifting away from cow's milk and towards plant-based products. In Borden's Chapter 11 filing, the company's CFO said that while milk remains a household item in the United States, people are simply drinking less of it. The company pointed out that aggregate U.S. consumption of conventional dairy milk has declined by an estimated 6% since 2015. This in turn has spurred a significant dilemma for dairy farms, as lower demand for conventional milk has led to lower intake for producers, as well as rising costs for consumers. To help combat the issue, New York Governor Andrew Cuomo recently announced more than $18.6 million to protect the state's dairy farms, with the state having provided over $30.7 million since early 2018. Meanwhile, the U.S. plant-based retail market has been reaping the benefits from changing consumer diets away from fresh whole milk and towards alternatives such as those sourced from almond, coconut, oat, and soy. According to the Plant-Based Foods Association and the Good Food Institute, plant-based milks have grown 6% over the past year and now comprise about 13% of the entire milk category, while cow's milk sales have fallen by roughly 3%. Against this backdrop, the financial markets seem to be responding to these changes in the dairy industry as the sector increasingly focuses on more environmental, social, and governance-related attitudes among both consumers and corporations. For example, while prices on the current Class 3 milk futures contract have recently plunged, shares of Defiance's newly launched Diet ETF have grown. Defiance describes the fund as offering exposure to companies focused on the whole range of technological, ethical, environmental, and social challenges of ensuring food security. Also, certain grocers, such as supermarket giant Kroger, have been shifting gears to accommodate the changes in consumer habits. In its third quarter financial report, Kroger said it launched plant-based brands that feature meatless burger patties and other products that appeal to a growing number of customers exploring meat and dairy alternatives. The company has also seen a generous lift in its stock price recently, as well as received very good demand for its latest 30-year bond deal this past week. Investors tuned into the increasing popularity of how ESG is triggering changes in the dairy industry, as well as in other areas of food, beverage, and consumer behavior, will likely be keeping a close eye on the survivability of other companies who may be slow to adjust to new business models. In the meantime, you can find more details on this topic in my full report, available now at IBKR Traders Insight. I'm Steven Levine with Interactive Brokers.